Welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be talking about local, global, and legacy trends. Okay, let's talk about trends, specifically local, global, legacy. If you don't know exactly what those terms mean, you can go to my Future of Trading course where I talk about those, or to give you a quick TLDR, local is the most localized trend, global is the father to that trend, and legacy would be the grandfather to the local trend or the father to the global trend. So it's kind of like a trend architecture, trends within trends within trends. With that said, we can start marking out some trends here. Okay, let's first go and take our replayer tool off, and then we're going to go and mark our trends. So we do have a range trend. Now, range trends aren't covered in this series, rather it's covered in butterfly effect stuff. So we do have a range trend here where you have accumulation to accumulation candle, and the reach point to this trend is going to create a trend underneath it. If we were to never draw any trends past this first trend, we are simply stating that this is your localized trend. This is the next one up on the chopping board. This is your local trend. So what we're going to do is we're actually going to create some architecture. We are going to mark the reach point of the previous trend as the base point to the new trend. And we are simply going to mark it to the next accumulation candle. Once you've done that, you now have a new local trend. This is your local trend, and the one above it is the global trend. And if you were to add another one, then you'd have one more further definition of trends. And you could actually just keep going with these. They can never end. You could go and you could create another one right here. And then the base point would be, this would be the reach point, and that would create another one right here. Typically, I like to keep this to 3 trends, as once you get beyond 3 trends, you're kind of just spinning your wheels and you're not really getting any extra valuable information. But you could literally have 10 or 15 trends that just array from each other all the way down. A nice shortcut that I like to do is when we don't have a clear trend connected, I like to go to the floating trend point, or the floating accumulation candle, for the simple fact that this would be the 5th or the 6th trend down the line. You would have this one right here. Let's mark this properly. You'd have this one right here, which would float all the way to there. And then you could mark another one. You could adapt it in time frame out to here. And then that would mark one like this. Well, you can simply shortcut all of that extra unnecessary work. And you can just take this trend out and you can just stick with 3 trends. So whenever you're thinking about trends and how they react, this is what happens. A local will break, it will stop at the global. A global will break, it will stop at the legacy. And then when a global gets hit, it usually has a pullback, creates a new local. When the global breaks, it hits the legacy, pulls back and creates a new local, which you think would be global, but it's not, because the legacy trend would then be local to that moment. So it's always important to remember that with this trend architecture, once you've hit these legacy moments and once you've hit these legacy trends, you're setting yourself up for a breakout. So this is the way it would work. You have your trend here. This would break. It would hit that trend. It would pull back and create this trend as the next architecture like that. Or maybe that's pretty aggressive. You would have this one here to that point there, like that, creating your next local trend. So essentially all you'd be doing is you'd be moving base point to there, and you'd be moving this reach point to there, and you'd be creating a new trend off the attack of that old trend, which would just further give you the next piece of your trend work. So a nice strategy is when you've broken these trends, don't try to aim for a target that's too much outside of what the trend will allow, because it's going to have a pullback and it's going to allow you to get back into trade. Now, that's not to say every single trade is going to go like this. Comes up, hits, pulls back. Sometimes what's going to happen is you're just going to break over this and go right over that too. But if you were to kind of take an average sampling size of these, you would notice that this is going to be a very common occurrence where you hit it and pull back. And the occurrence where you break right through it is typically going to be onset by something very different and is going to be quite rare, to be honest. So the amount of profits that you lose by not locking up a trend to a trend trade and just getting in at a lower price to reattack that trend is going to be substantial. So the best way you can attack trends and take your trades when a trend breaks is you let it hit, take your exits on your trend, let it pull back, get back in where the move is going to hold, whatever hold level is created, and then allow that to break the trend. Because once you've tested this trend once, then it can break. If you haven't tested it and it's kind of just floated out to this moment like this where it hasn't been tested in a while, you should probably take your exit on that trend. So whenever you're using these trends and creating kind of this trend architecture on the charts, just be aware of how many times they've been hit. If you're going and attacking it for the first time, it makes for a great opportunity to either short or take profits on a long. And then you can get back in it if the move holds and creates maybe another ladder point or uses a hold level. It can go up, it can attack the trend, you can take your profits, and hey, maybe it starts laddering up like this off of this trend. And then you can take that next trend trade as well. And you can go after this one and you could do the same thing and get out of the trade here and just kind of constantly repeat that pattern. So this is a great strategy for trends as it gives you a lot of safety and it guarantees profits. All right, see you on the next one.